In this edition, we are talking about a company called Manorama Industries Limited. So what is unique about Manorama Industries? Manorama Industries works with thousands of rural and tribal households who collect tree-borne seeds from the forests in India and Africa, and along with them, Manorama works together with them, processes these seeds, and company makes something which is called as cocoa butter equivalent, or CBE for short. So their end customers, which is Manorama's customers, are predominantly the biggies in the confectionery space, like Mondelez, Hershey's, Nestle, Ferrero, etc. Along with that, their customers also include biggies in the personal care space, companies like L'Oreal, companies like Garnier, etc. So these companies are actually very big on sustainability, traceability, and so on. So and along with that, Manorama gives a livelihood to many of these tribal folk, both in India as well as in Africa. Now, the whole process that Manorama does is, once they collect these seeds, which are basically mango seeds, which are chia seeds, which are sal seeds, these seeds are collected and processed locally at factories both in India and Africa, and then everything is actually brought back to India. They have a huge plant in Chhattisgarh. So Manorama brings all the seeds from the Indian processing centers as well as African processing centers and brings it to its centralized plant. From there, they do a process called fractionation. The outcome of the fractionation is basically the different butter and cocoa butter, like cocoa butter equivalent and stuff. Which is being supplied to the confectionery companies as well as the personal care companies. Now, the story of Manorama Industries is also about capacity expansion. So in FY23, they had a capacity of 15,000 tons per annum of fractionation, which as we speak, they have taken it up to 40,000 tons per annum. Over the last 3 years, their revenue has grown at a CAGR of circa 40% plus, and their profit after tax has grown by a whopping 67%. Now, in the next year, they are again improving their capacity expansion, capacity from 40,000 tons per annum to 52,000 tons per annum through a brownfield expansion. And the management is expecting the revenues to grow over the next few years at a clip of about 40 to 45%, as well as the margins too. So Manorama Industries is a very high growth opportunity. It's a high growth company which is growing at above 40% in revenues and around 50% in profits. And it is in a way a play on capacity expansion. So the more capacity they have, the more will be their revenues and their margins. For example, their margins move from about 16-17% to 25-26%, which is the current margins. The particular business or stock is not valued very cheaply now. It is still valued at about 40-45%, 45 times price to earnings. Which is not cheap, but for a company which is growing at this astronomical rate, this seems to be a okayish, reasonable valuation. So even if you don't get a PE valuation hike, still the revenue should be able to compensate for the growth. Thank you.